Narrator serious, slow, every few months. A new headline flashes across your screen. National debt reaches historic high. Global debt crisis deepens. Governments borrowing at record levels. But have you ever stopped and asked the question almost everyone overlooks? If every country is drowning in debt, who is the creditor? How can the entire world owe money when the entire world is the only place where money exists? Is there a mysterious global lender? Are countries borrowing from each other in a closed loop? Or have we built a financial system where debt isn't a problem to be solved, but the very engine that keeps everything running? Today we're going to unwrap one of the most misunderstood concepts in global economics. By the end of this video, your entire understanding of money, what it is, where it comes from, and who controls it, will be different. To understand the paradox of universal debt, we have to go back, not decades, not centuries, but to the very moment humanity stopped trading goods and started trading promises. Because the truth is this: debt existed before money. Money was created to track debt. The modern world still runs on that logic. But here's the twist. The biggest creditor in the world today isn't a country, isn't a bank, and isn't even a person. We'll get there, but first, we followed the timeline. Well, why? Before modern currencies, ancient civilizations recorded debts on clay tablets. Farmers borrowing grain for the planting season, merchants trading across borders. Almost everything was a credit arrangement. Money emerged as a receipt, a portable IOU, something you could hand to someone else instead of the original creditor. Fast forward to medieval Europe, kings and empires borrowed heavily to wage wars. When they couldn't repay, they debased their currencies, mixing in cheaper metals, lowering value, inflating away their obligations. Pattern borrow, debase, repeat became a kind of economic tradition. But the real turning point came in the 1600s, the invention of the central bank. Sweden created the first, but the Bank of England refined the model. The government borrows money. The central bank creates notes backed by that debt. The public uses those notes as currency. And with that, the foundations were laid for the modern system. Money equals someone else's debt. Jump ahead to the 20th century. The gold standard collapses. In 1971, President Nixon ends the dollar's convertibility to gold. From that moment on, fiat money became fully debt-based. A pure fiat system. Governments could create money through spending. Banks could create money through lending. Every new dollar entering the economy was born through debt. Now the system had liftoff. The US ran deficits permanently. Europe borrowed to build welfare states. Developing countries borrowed to industrialize. Debt wasn't a sign of failure. It was the cost of modern civilization. But then came the next phase. By the 1990s, debt had grown faster than economic output almost everywhere. But the real breaking point came in 2008. The global financial crisis didn't just reveal excessive risk in banks. It exposed a deeper truth. The world's financial system requires constant borrowing just to stay alive. Governments bailed out banks. Central banks slashed interest rates. Quantitative easing flooded economies with new money created by buying government bonds, which are themselves government debt. After 2008, the world created more debt in 10 years than in all of human history before it. The global system was now locked into a paradox. To fix a debt crisis, we needed more debt. And then came 2020, a global pandemic, supply shocks, stimulus packages, trillions issued in emergency spending. Debt reached levels economists once thought impossible, but we're still here. This raises the question, why hasn't the system collapsed? When countries owe more than they earn, three outcomes typically follow. Too much money chases too few goods. Debt becomes easier to pay. But people lose purchasing power. Governments can't invest, they're stuck servicing old debt. These effects ripple across decades, shaping the modern world. Japan's lost decade became 30 years. Argentina entered crisis after crisis. Eurozone nearly cracked in 2012. The U.S. crossed $34 trillion in debt and kept rising. And yet, despite all this, countries still borrow, which seems irrational, till you realize the alternative. A world without debt would collapse overnight. Because debt isn't a flaw in the system, it's the system. Every pension fund, every insurance company, every retirement account, every major bank holds government debt as its most important safe asset. If government stopped issuing debt, your savings account would vanish. Your bank would have nothing to lend. Global financial markets would seize up instantly. This leads us to the most misunderstood truth. For decades, politicians claimed they would balance the budget or pay off the debt. But economically, this is nearly impossible. Why? Because paying off the national debt would remove trillions in safe assets, cripple bond markets, destroy pensions, crash global banking, collapse the money supply, in other words. Paying off the national debt would break capitalism as we know it. Every proposed fixed spending cuts, austerity, tax hikes, debt ceilings fails for the same reason. Debt isn't a bug, it's a design feature. The system requires it to function. Which brings us to the question we started with. If every country is in debt, who's the creditor? The answer is not one entity, not one country. The creditor is the system itself. Government debt is owned by central banks, commercial banks, pension funds, insurance companies, corporations, wealthy individuals, foreign governments, and ordinary citizens through retirement funds and bonds. In other words, we are the creditors and we are the debtors. Global economy is a closed loop. One country's debt is another country's asset. One person's liability is another person's income. One bank's loan is another bank's reserve. The entire world is built on a giant network of interlocking IOUs. And as long as the network holds, the system survives. But if trust breaks, the entire structure collapses. Today, global debt has passed $300 trillion. The U.S. debt to GDP ratio is above 120%. Japan's ratio is over 250%. Italy, Greece, France, and the UK all exceed 100%. China's total debt is now over 300% of GDP, if you include local governments and corporations. These aren't isolated events. This is a pattern. Every major empire in history, Rome, Spain, France, the Ottomans, Britain, followed the same arc. Borrow gives expand, gives overextend, gives inflate, gives reset. The pattern is repeating globally. But on a scale never seen before, technology evolves, borders change, currencies come and go, but the cycle of debt remains constant. Because debt is not just a financial instrument. It's the story of human ambition and human limitation. Debt is not inherently bad. It's the backbone of modern money. Without it, the system collapses. 2. The world doesn't owe money to a single mysterious overlord. Debt circulates within the system. One entity's burden is another's asset. Crises occur not when debt is high, but when trust is low. As long as people believe governments can repay, the system holds. Lose that trust, and the consequences are immediate and global. We've built a world where prosperity depends on perpetual borrowing. A world where money is no longer tied to something physical, only to our belief that the system will keep working tomorrow. But belief is fragile. And history shows us that debt cycles always end, either smoothly or catastrophically. Which path we take next depends on decisions being made right now, in governments, banks, and institutions around the world. The system will not remain stable forever. The question is not if it changes, but how. If you enjoyed this deep dive into the hidden structure of global debt, hit the like button, share this video, and subscribe for more investigations into the forces shaping our world. In the comments, let me know. Do you think the global debt system is sustainable, or are we heading toward a reset? Our thoughts might shape the topic of our next video.